I'm absolutely optimistic for the long term because AI's impact is still in its early stages. We haven't yet seen AI applications reach maturity, and when they do, the world will certainly look very different from today. The current AI growth trend can be observed in three areas. First, in terms of revenue growth. Hyperscalers continue to show strong revenue expansion. Though growth rates fluctuate slightly, they generally maintain relatively high levels. For example, throughout 2024, AWS, Microsoft Azure, and Google Cloud all maintained year-over-year growth rates above 20%. Second, data demand. The rapid growth in data generation is driving strong demand for digital infrastructure. Global data generation is projected to grow at an astonishing rate. From the beginning of this decade to the end of this decade, there's an expectation of a 20 times growth rate in data generation. This requires significant expansion of network capacity and bandwidth to support continued data growth. Finally, IT spending, AI-related developments are the main driver of IT spending growth. With global IT spending projected to reach $5.7 trillion in 2025, this is a 9.3% increase from 2024. Software and IT services lead this growth in absolute terms, but we've seen rapid growth in data center as well. These demands and capital expenditures will continue to drive the market growth. And the BNP Paribas Disruptive Technology Fund will continue to seek beneficiaries of this trend, keeping pace with the most important technological reform wave in recent years. Simply put, it's because sectors like medical devices and biotechnology are easily affected by rising interest rates. Plus, uncertainties about healthcare policies from the new administration have contributed to the relatively poor performance of the biotech and broader healthcare sector. Although the healthcare sector has underperformed the broader market in recent years, making its valuation relatively attractive, the sector has many compelling long-term advantages. Most obviously, the aging population structure means demand for healthcare will only increase. And we can see that healthcare expenditures as a percentage of GDP continues to trend upward globally, which are positives for investment. Most importantly, under the AI wave, technological advances in gene therapy, precision medicine, digital healthcare, and other fields are bringing revolutionary changes in the healthcare industry. Therefore, for investors with a long-term perspective, the current healthcare sector valuations offer a good entry point. The BNP Paribas Healthcare Innovators Fund focuses on identifying healthcare companies with long-term growth potential. Through active stock selection and diversification, it can reduce risk while capturing the long-term growth potential of the industry. Absolutely. There are still many reasonably priced stocks in the market, especially after this most recent drawdown, particularly in small caps. Small caps fell 20% during the 2022 rate hike cycle, and small caps typically experience several years of rebound following major declines. Currently, small caps price to earnings ratios relative to large caps are at historic lows, and small caps earnings are poised to catch up with large caps and even accelerate past large cap growth potential. Low valuations and high growth potential typically signal an entry point. Additionally, the small cap market is generally less efficient, making it easier to find undervalued quality companies through active stock selection. The BNP Paribas US Small Cap Fund excels at discovering resilient small companies with enduring competitive advantages, and there's growth potential for long-term investors.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书。